Wait, before you skip this video, let me show you something that could change your portfolio forever. Right now, there's a gold mining stock trading at what analysts are calling distressed levels, while gold itself is trading near all-time highs. Does that make sense to you? Here's what's even crazier. This company just reported a 74.6% revenue increase. Their production beat expectations across all their mines. They're sitting on $367 million in cash. But the stock is still undervalued compared to every other gold producer. Why? One word: Mali. 58% of their production comes from one African country, and investors are terrified. But here's what they're missing. In the next 5 minutes, I'm going to show you exactly why professional analysts are screaming buy on this stock right now, while retail investors are running away in fear. I'll break down the numbers, the risks, and most importantly, the opportunity that could be sitting right in front of you. But I need you to watch until the end, because the most critical information comes in minute 4, where I'll reveal what the CEO just said about Mali that changes everything. This is B2Gold, ticker BTO on the Toronto Exchange, BTG on the NYSE, and by the end of this video, you'll know if this is the gold stock you've been searching for. Let's dive in. First, let's talk facts. B2Gold isn't some junior explorer gambling on dreams. This is a real company with real production. In Q3 2025 alone, they produced 254,369 ounces of gold. Revenue? $783 million. That's a 74.6% jump year over year. Their cash operating costs? Just $780 per ounce. All-in sustaining costs dropped 10.4% to $1,479 per ounce. Now compare that to gold prices hovering around $2,600 to $2,700 per ounce. Do the math. These margins are massive. But here's where it gets interesting. They operate 4 mines across 4 countries. Fekola in Mali, their powerhouse, producing 58% of total gold. Masbate in the Philippines. Otjikoto in Namibia. And the new Goose mine in Canada, which just started commercial production. Every single one of these mines exceeded production targets in Q3. That's operational excellence you can't fake. Now, you didn't come here for a history lesson. You want to know what the smart money is doing. Current analyst consensus? Strong buy. The 12-month price target sits at $6, representing a 31.87% upside from current levels. But that's just the average. Here's what professional analysts are actually saying behind closed doors. Quote, B2Gold is trading at distressed valuations despite gold being near all-time highs, end quote. Think about that. Gold is expensive. B2Gold produces gold cheaply. But the stock is cheap. That's called a disconnection, and disconnections don't last forever. The market cap is 8.39 billion Canadian dollars with a P ratio of 29.90. They're paying a dividend of 1.78% yield, showing confidence in their cash flow. But wait, if everything is so great, why is the stock undervalued? This is where most investors make their biggest mistake. They see Mali and they panic. They remember headlines about political instability, military coups, and mining disputes. And yes, 58% of B2Gold's production comes from Mali. That's real risk. That's significant exposure. But here's what those investors are missing. Let me tell you what's actually happening in Mali, because this is the information that separates winning investors from losing ones. While other mining companies like Barrick Gold faced attention of executives, asset seizures, and massive disputes with the Mali government, B2Gold took a completely different approach. They didn't fight. They didn't resist. They complied early. The CEO, Clive Johnson, recently stated, and I quote, "From B2Gold's perspective, the risks have been reduced since the settlement agreement was signed," end quote. Here's what they did. They proactively agreed to the new mining code. They settled all disputes with the government. They maintained continuous operations without a single day of interruption. All permits remain valid and in good standing. Expatriate employees move freely in and out of the country with zero detention risk. While competitors were fighting Mali, B2Gold was securing their future there. And they're doubling down. Planning a $10 million exploration investment at Fekola, plus underground mining approval they just received in July 2025. You don't invest $10 million in a country you're afraid of. This is the critical piece of information most investors are completely missing. The Mali risk? It's been mitigated, not eliminated, but significantly reduced while their competitors are still fighting battles. But here's the real opportunity that has me excited. The Goose mine in Canada. This is their newest operation, high-grade underground ore, and it just started commercial production. Yes, they had some technical issues with the crushing plant that lowered 2025 guidance slightly. But think about this strategically. Once Goose fully ramps up in 2026, B2Gold's production profile changes. They'll have significant production coming from Canada, one of the safest mining jurisdictions on Earth. That means less Mali dependence. That means the risk discount the market is giving this stock right now, it disappears. Add to that, Fekola underground expansion adding high-grade ore. The Antelope underground deposit development decision just announced. Strong balance sheet with $367 million in cash. Low debt levels. Consistent cash flow generation, $180 million just in Q3. This is a company positioned for growth, while trading at today's prices like it's in decline. Now, let me be crystal clear because this is important. I am not a financial advisor. This is not financial advice. These are facts and analysis, but you need to make your own decisions. The risks are real. Subscribe to this channel for more deep dives into undervalued opportunities the market is missing. Thanks for watching, and I'll see you in the next video where we uncover another hidden gem the market is sleeping on.